Welcome to the Trust the Plan podcast. I'm Nick.
And I'm Jim.
And Jim, the summer party's coming up soon. I think it's August 8th, if I'm not mistaken.
August 8th, Thursday night.
Thursday, August 8th. And we will have the Peak 10-year anniversary t-shirts available.
They will go quick.
They will.
They are a good looking shirt.
They are. And we broke out a few at the halftime report. And the people that have been clients for over 10 years got their tees, and everyone else was just drooling over them.
Yeah, they were.
So we're like really building up the demand,
Yeah, it's gonna be a frenzy.
Yeah, okay. So August 8th, getting those Peak 10-year anniversary t-shirts out. But for today's podcast, we're gonna talk about a real life case study with NVIDIA stock as the key player here. So in December, we had someone come to us and ask us if they can retire early. And they were an employee of NVIDIA with a good income and a whole lot of stock. And they had been getting stock for years and years and years and selling some here and there, but still had accumulated quite a ton. And as you know, NVIDIA has been the market darling for the past several years, particularly the last couple years. And so the question, can I retire, right, with a couple $1 million or a few $1 million plus some NVIDIA, a ton of NVIDIA stock, and some other investments here and there. It's a reasonable question, but the person was pretty young, right? So like a fire person.
Yeah,
right?
I was gonna say, we've talked about these fire folks for a while, where they want to retire early and live off of what they've saved to that point. It can be very hard to do.
Right. So the fire people, they want to get to $1 million so they can live on 40,000. It wasn't a situation like this. Here we have much more money, right? But we're spending more as well, right? More like a traditional lifestyle. Okay. But the answer in December to the question, can I retire early, was no. You'd have to have a dramatically lesser lifestyle at that time. That was my official professional opinion to pull the trigger. Right. But this person, is a continued coaching client where we're able to, re-engage and run the numbers at different dates. And so in June, last month, we had another meeting with the same question. Okay, now can I retire? And what's happened with NVIDIA stock since June? What's happened in the market since June, or since January, I mean? Well, NVIDIA's up like 140% this year. So if you have millions of dollars worth of NVIDIA stock and you double it,
just more than doubled,
more than doubled, you might imagine how the answer to my question changed, and it did. So the answer was yes, you can retire. And I just reflect on that and I think, how often does my professional opinion change so quickly?
Right.
Never. It's never happened. And so the one caveat that I said was, look, you've said that you have X dollars per month of expenses, and I believe you, but you have to prove it to yourself. Because if you have a larger lifestyle than you're willing to admit to yourself, then maybe the answer still is no. But prove it to yourself. Make sure that those numbers are true, and then pull the trigger.
Yeah, the other thing that I think of is in a situation like that where you have a stock that's just been so good for such a long time, is you think it's invincible and you think it will just go up forever. So a big part of that is if he wants to retire off that money, he needs to be willing to live off that money, which potentially means selling some of that stock. And that can be a hard thing to do when you believe in it and it's gotten you to where you are. But to be able to say, I've accomplished my goal with it, I've done enough, I'm ready to move on from it, isn't always so easy. And the flip side is sometimes they don't go up forever, right? I kind of grew up, in the tech bubble, right? And great companies that were the future, and man, they still have not approached anywhere near where they were back then,
Totally agree. I am a child of the tech bubble as well. And so I always am reminded of 1999, 2000, and that big internet bust So just when you think, just when you think it can't go any higher, it will. And just when you think it can't go any lower, it will. Right. So you have to hedge. You have to ask yourself, what if I'm wrong? Just because I've worked at a place for 20 years and it's been a great stock the whole way through doesn't mean the next 20 years are going to be the same. And we can learn from our own backyard here in Detroit with Ford Motor Company as an example. So from the time Ford went public, like 1957 or something, through 1999, it was like one of the best stocks on the New York Stock Exchange, one of the very best. And since 99, it's been one of the worst. And I don't know what that line in the sand was. I always think it's when they spun off Visteon, but how important was that? I don't know. It was probably a coincidence, but the stock has been just terrible. Your only return has come from the dividend. Right.
Yeah, and I think that's true. Obviously, Ford's a good example of that, but I also think it's worth noting too that there's a lot of really good companies out there that have really good products that make a lot of money, but that doesn't mean their stocks are good, right? It doesn't mean their stock can't be overvalued. It doesn't mean their stock can't go down. We've seen a lot of really good companies that make a whole lot of money have really bad stock prices. Stock prices can get out of whack. They can get overvalued. They can be undervalued. I'm not saying it is. I don't know what's next for NVIDIA, but it's real, and I've seen it happen throughout my career. That great companies can still have crummy stocks and stocks that go down even though they're making a lot of money.
Yeah, I used to say back in the day, great companies can still have bad stocks. Right?
There you go.
Like, what's your favorite from March of 2000? JDS Uniphase, I think you like to talk about, right?
I still have pain about that. It was the foundation of the internet. They were laying all this fiber optics, and I thought, this is great. And it was this great stock, and it doubled, and I'm rolling in it, right? And then guess what? It goes down a few points. Well, I can't sell now. It's going to come back. It goes down 10 more points. Well, now I really can't sell, right? And next thing you know, you're losing money on a stock that was the hottest thing going. It's just the memories that I have from that tech bubble that that was real life.
What I remember about JDS Uniphase, and I was in college, March of 2000, on spring break, and I turned on CNBC, and the market was it was a bloodbath. It was like the beginning of the end, right? So the JDS Uniphase CEO goes on CNBC, and he's just like, sales are great, everything's great, we can't even keep up. I don't know why the stock's going down. And the market was telling him that it was over. The market knew, right? But the market was just ahead of itself, right? Like, I don't know if the PE ratio was 100 or something, like it just cannot sustain. And so our general advice when we have companies with RSUs, like NVIDIA or Ford or Google or whatever, it's part of your compensation package. You're always going to get more. So if the price is at least decent, we need to be unloading. And that's not specific advice for anyone listening or watching, but it's just a general philosophy that we tend to subscribe to. And so there should never be a position where a huge percentage of your net worth is tied up in the company stock, right? What if you have a Ford pension and a Ford paycheck, and your 401 is all in Ford stock, and then the company goes bankrupt, right? In 08, the stock was down to $1.
Yeah.
It was right on the edge.
It was close, yeah.
So now you could lose your paycheck, you could lose your 401.
Your pension.
Yeah, and your pension is a separate qualified plan, but again, it's still tied to the same company. For example, when GM went bankrupt, the pension was safe. So that's something important to realize. But the point is, we don't want to have all of our eggs in one basket when it comes to employment, pension, 401, RSUs. So just wanted to use this case study to bring it to your attention how things can change quickly. And imagine how it would be reversed, where maybe in December the stock was very high and we said, yeah, go ahead. And then by the time they're ready to pull the trigger in June, the stock goes down by 50%, and now we can't do it anymore.
Right.
The pendulum swings both ways.
Yeah, and the other thing I'll add when you talk about you know, if you keep getting RSUs and the price is good, so we talk about unloading some shares, selling some. That doesn't mean unload it and, well, I got to spend it on something. I'll go blow it on a vacation or, you know, whatever, new toys. But you can, it's just a way to diversify. It's taking money out of a concentrated position. We can still save it somewhere else into a different type of account where we're now invested in, you know, a variety of other companies.
Yeah. Now, one last point here. The advice, or I'm sorry, it wasn't advice, the general concept that we just talked about where we sell the RSUs as they're maturing each quarter. You know, we would have looked dumb if we did that with NVIDIA over the last several years because the price kept going higher and higher and higher very quickly. But I stand by that concept because you just don't know what the future holds. So, you know, even though we could have made more by holding it, I still think the prudent advice is to sell and diversify. But that's not general, that's not specific advice for anyone listening once again. But if you have a situation like that with RSUs, reach out to us, peakwm.com, and we can set up time to talk about your situation. Maybe you're eligible for early retirement.